So I've been taking a little time to think about some of the conversations I had at Knowledge last week. I've been taking a little bit of time to look a little bit closer at what was said and what was presented at the Financial Analyst Day. I've had the opportunity to talk to some of the financial analysts out there, which is always great, right? Obviously, sharing and lending their time, I think it's always appreciated, right? It's another line of perspective. It's important that we think about things when we're talking about these vendors, specifically like a ServiceNow, in terms of how they're communicating things to the financial community, to their investors, because obviously what they report, how they report it, what do they say, speaks volumes as to where they're focused, what they're going to need from their customer base. And I spent a lot of time earnings call, breaking those down and things like that. But the Financial Analyst Day for all the vendors, but specifically for ServiceNow, it's really important as they continue to go on a growth trajectory, right? So I want to spend just a couple minutes, right? A couple things that were said, a couple things that I'm hearing, things that are in the presentation, which you can go find on their investor relations page, financial analyst community reports that are out there, and kind of pull it all together. So number one, 15 billion, right? 15 billion, they've doubled down, tripled down on that number. That's the number, revenue number that they're expecting for FY26. So not that far from now. The interesting thing is they said that the Pro Plus or Now Assist component of that's going to be $1 billion. If you kind of look a little bit further, they announced that they have 1,000 customers that are AI customers. The revenue tied to that's $250 million right now. So if you just do some simple math, in about, let's call it 18 months, they're looking to add $750 million to a $250 million current number tied to Pro Plus, tied to Now Assist, tied to AI. Now, how are they going to do that, right? We've talked a lot about this. One, it's the hybrid pricing model, which is kind of an upgrade, right, that we're used to, but there's a component within it that's Now Assist. There's a meter, consumption-based tied to that. So if you blow through your number, you owe them more money. During the presentation, there's a slide. It talks about the consumption. They're actually at a 50% growth month over month on Assist consumption. So that's going to help them, probably give them confidence to get to that $1 billion number. The low-cost AI starter pack, like I've talked a lot about this. They even said, look, this is helping us get to POCs, get customers to taste this product, this upgrade, this interest in moving to Pro Plus that they say they can't do till later. Let's give them a low-cost option to get them tasting it. I'm not going to spend time too much on analogies, right? But there's probably an obvious one. This is the game plan. So I would always tell customers, before you start tasting, before you jump on this low-cost AI starter pack option, I'd get some transparency. Like, okay, well, let's say this plays out. Let's say this goes where we want. How much is it going to cost? What are you going to do for my underlying other products I need to renew? What are you going to do around definitions? What is an assist? What are we going to do for volume discount structures? What are we going to do relative to investments to actually make this valuable as I sign up? So there's a whole host of things. You may not get to contractual commitments, but I highly recommend you push ServiceNow and your reps through before you start tasting. Now, I always like to pay attention to how their base is broken up relative to the additions. So 55% of the base, ITSM, CSM is the ones they talked about, are sitting on Pro. The other way to look at that is they kind of just tilted over half. 45% are on a lower edition. They can't have that. So all of you out there that are on standard enterprise, they need you to go up. They need you to go up. In fact, they even talked about the fact that 10 to 15% of the base is on Pro Plus. So that's a massive amount of customers that are going to come after. They are, rather, to push the AR starter pack, to push getting access to the C-suite, to push these conversations. 15% of the customers in FY24 that were sitting on standard jumped all the way to Pro Plus. So that's another interesting thing, right? So if you're sitting standard, you know that they don't want you to just slowly move. They need you to jump, right? 15% of those customers did that in FY25. That's actually pretty impressive. Now, uplifts. It gets expensive. When you move up, obviously we help customers negotiate these deals. And it's also not just about the pricing. It's about the protection. It's about the flexibility, all the things I always talk about. But if you think about just pure uplifts, average uplifts that they've put out there publicly, from standard to pro, it's about 25%. From pro to pro plus, it's 30%. From standard to pro plus, it's 60%. So those are massive numbers. And so when you talk about how they're going to get from $250 million in AI revenue to $1 billion in 18 months, that's how. Assists are going to move. Consumption rates are 50% growth, month over month. They're pushing these low-cost starter, taste-it options. They are pricing things so that there's a steep uplift. So in other words, now more than ever, we know what they want. We know where they need to go. It's all about, before you start a journey, make sure ServiceNow is giving you what you should be getting today, value out of the products you've been subscribing to, the right pricing for the products you've been subscribing to for years, ITSM, software asset management, whatever, HRSD, whatever it may be. Making sure that if you do make the move, that it's the right price, right flexibility, so forth and so on, right definitions, everything. Now's the time to do this. If you want to optimize, you want to right size. Don't let them get upset about it and try to make up for it. Make them earn the right to continue conversations about where they want to go. But first, they have to do something, which is, for most of you, getting you to a place where you're getting what you've expected out of the things you've been paying for.